you can't force the banks to loan. I mean, we're in this recession, which everyone is proclaiming may be the worst in many, many decades. But the government can't make a bank make a loan. Maybe it's not in the bank's shareholders to make a loan. Maybe it's not prudent to make a loan. What's your take on this story?
Well, I know that you can't make loans if you don't have any capital, and the whole point of this capital program of buying perpetual preferred stock in these banks was to bolster their capital so they could do all the things that banks do when they're well capitalized. Make loans, make acquisitions, build new buildings, send out advertisements, whatever they do. And loans are part of it. They'll make the decision. They'll do it when the time is right. I think it's very, very wrong, by the way, to blame Paulson for doing a big change up here, a switcheroo. That's not true. We've had over a month of knowing that this troubled asset acquisition program wasn't going to happen. That was never going to happen.
But were you surprised?
From before the ink was dry on the darn thing.
I understand,
they were talking about making capital injections.
He's opening up another phase now with regard to consumer loans. As Steve Leisman reported, the asset-backed paper backed by credit cards, student loans, automobile loans, all of which conjures up worries on the consumer sector. Best Buy, John, as you well know, led off today with a lousy forecast of 2009. So the market was tanking well before Paulson. But the fact that he's opening up this new front on the securitized asset-backed consumer-related paper, does that trouble you?
What troubles me is that when he talks, he is unfortunately, like most Bush administration officials, he simply does not inspire confidence. He gives the impression he doesn't know what he's doing. He's just putting out trial balloons. But look, let's look at the reality here. He has committed $290 billion of the $350 billion that Congress has let him do on his own before going back and asking for more approval. So it's not like he hasn't done anything. He's just putting out new ideas of what he might do in the future, and that's why he asked for this big authority to begin with. So after he'd spent almost half of it, he could start putting out trial balloons for how you spend the other half. That's what you're supposed to do. I just wish this guy, who somehow or other managed to lead one of the greatest investment banks in history, could just act like a leader.
Yeah. All right, a leader. Don Luskin, what do you do tomorrow morning in the light of today's sell-off and all that has preceded it?
You know what, Larry? We're in a panic. We're in a recession. But there's something that's always true about stocks, which is stocks always reprice themselves to offer investors who buy them at any point in time a positive return. That's why stocks are down 45% from where they were a year ago, because the news has gotten very bad. You've got to buy them when they're down, because when they're down, they later go up. When they're already up, they later go down. All
right, so that's at least a quasi-optimistic point of view. Luskin, I want to, excuse me, I want to fight the tape just a little bit because Dan Yergin talked about the tax cut effect of dropping energy. I want to raise the Fed's cash injections, which I think are positive. I also want to raise King Dollar, and I also want to say that lower energy helps corporate profits. I just want to fight the tape, Don. Go ahead, take a whack at me. Here's my chin. You can just nail me right here.
I'm not gonna. I'm gonna stroke your chin, Larry. You're saying all the right things. I'd go further. I'd say that just as low oil prices are a tax cut, low stock prices are a gift. I'll give you a choice. Would you rather buy the S&P at 1,500, or would you rather buy the S&P at 850? It doesn't take a genius.
Larry, you've been bullied.